Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Looks like we're in for another fun week this week. We'll talk a little bit about the markets. We also have some news of various Elon Musk meetings and interviews coming up. We've got new forecasts on Tesla from Adam Jonas of Morgan Stanley, some news on China, and a few various other updates. Alrighty, so the downtrend continues. Tesla today down 9.1%, closing at $787.11, now trading at 69 times Q1 earnings annualized, and the trailing 12-month price to earnings ratio down to 106x. Of course, Tesla not alone in that performance today. The Nasdaq down 4.3%, so unfortunately we get to dust off our chart here of the worst performances over the last 2 years, and really there's no dust on it because we just looked at this on Thursday. But we now get to add today's performance to the list in the 4th position. So over the last 2 weeks, we have had 4 of the worst 7 days over the last 2 years for the Nasdaq. Now, obviously, that's going to be a very tough period of time for any growth stock. Tesla not immune to that over very short periods of time. But I do believe because of the fundamental strength that Tesla has demonstrated over the last year through all this turmoil and all the challenges that have existed, it is actually holding up decently well. Not as well as I think it should, but still up 16% over the last year, while the Nasdaq is down 12%. I'd expect that when we're looking back a year from now, Tesla similarly will have outperformed the Nasdaq over that period as well. Tesla will keep executing, and eventually the fundamentals will become undeniable regardless of the macro circumstances, and that's why we see Tesla 10 times, 20 times more valuable right now than it was just a couple of years ago. Anyway, as we move forward through this week, of course, last week all eyes were on the Fed meeting. This week, the CPI and PPI reports take that place of interest. The Consumer Price Index comes out on Wednesday morning before market open, and the Producer Price Index on Thursday morning. Another thing just to kind of keep an eye on is the price of Bitcoin. Of course, we know Tesla still has Bitcoin on their balance sheet, and if it falls below a certain level, Tesla will have to mark an impairment from that Bitcoin, like we have seen in a couple of previous quarters. That is on the table here for Q2 if Bitcoin drops another 10% or so. But the good news is that Tesla's earnings these days are so significant that any impairment from Bitcoin is going to be a relatively small factor, unless Bitcoin continues to drop another 30+% from here, which certainly is possible. If that does happen, we'll talk about the implications, but could be a few $100 million worth of impairment, which wouldn't matter if Bitcoin returned long term, but either way, Tesla would have to mark that impairment in the quarter. All right, while we're on more stock-related things, I did want to take a quick look at a new note from Morgan Stanley's Adam Jonas this weekend, mainly just to highlight what kind of information is being passed around Wall Street. So Morgan Stanley in this note have updated their Tesla forecast. They still are maintaining an overweight stock rating and a $1,300 price target. We'll take a look at those forecasts in a second. They are interesting, to say the least, but just a couple of things from the note. First, they say that this is the mother of all CapEx cycles, and they say to keep an eye on Tesla's leadership role in this cycle. They highlight that war plus inflation equals energy innovation, which I would agree with. We've talked a little bit about that in previous episodes. But Jonas goes on to write that, quote, "With respect to Tesla, we think attributes like AI, autonomous, and EV are fully, if not overappreciated here. In fact, we believe Tesla's more gritty capabilities in terms of manufacturing, material sourcing, supply chain, and infrastructure will drive the next leg of growth to the story. Tesla's prowess as a tech company is known," end quote. Well, considering you can build a model that would fully justify Tesla based just off of selling cars, I definitely do not agree with that take. I do actually agree that Tesla's so-called gritty capabilities are also underappreciated, but calling some of those elements for Tesla that are hardly appreciated at all, in terms of at least the valuation, overappreciated doesn't really strike me as being accurate. Anyway, I don't want to get too hung up on that. There's plenty more here to do that with. Getting into the forecast, Jonas is talking about multiples, which indicates his earnings expectations for 2025. So he says that as of Thursday's close, Tesla was trading at 42 times their 2025 earnings forecast, which means they're expecting less than $21 of earnings in 2025. That's only up like 80% from Q1 annualized. It's kind of weird that they have a $1,300 price target with these expectations, and even more so looking at the next couple of years. For some reason, their earnings forecast for 2023, they have lowered from $10.90, already super low, down to $9.66. This is a ridiculous forecast. Tesla's earnings over the last 12 months have been $7.37, but that includes a bunch of CEO compensation and CEO payroll tax that isn't going to happen going forward, at least not to that degree for a long period of time. If you just take those things out from the last 12 months, earnings would have been roughly $8.25. So this is only 17% above basically where Tesla has been running at during a period with about 1 million deliveries. Tesla in 2023, they're going to do a lot more than 1 million deliveries. So you'd have to be expecting huge margin compression despite the huge price increases that we have seen from Tesla. It's basically just nonsense, and I don't know how they could publish it. I don't know how they could defend it, and I don't know how they could have this price target if that's actually what they expect. All right, moving on, we've got another quick update from a bank. This is from JP Morgan. Remember, we had previously talked about how they had sent a letter out to some customers saying that Tesla had been planning a 20-for-1 split. I believe that was first shared on Tesla Motors Club forum by user Traxilla. They have shared an update on this. They've gotten new communication from JP Morgan. This updated letter says, amended notice. Tesla Inc. announced that it plans to request shareholder approval at its 2022 annual meeting for a stock split. The effective date and the rate of the split are yet to be determined as it is subject to shareholder approval. So they're backtracking on their previous communication. No surprise on that, but the question then is whether they're backtracking because they weren't supposed to share that or because it was incorrect. I'm still guessing a 20-for-1, but who knows, it might not make a lot of sense to do that if the market stays how it is right now. Next, just a quick update on Giga Shanghai. No article on this or anything, but as we had talked about previously, Tesla had originally planned for some downtime in April for a production upgrade. Then because of the COVID lockdowns, they weren't able to complete that. That had then been split into partial upgrades both in May and July. What I've heard now is that Tesla has pushed that all into July. My guess there is that Tesla just didn't want to further reduce Q2 production on top of these lockdowns. Perhaps they're still hopeful that they can get back to Q1 production levels. As we walked through, that does seem like a little bit of a stretch, but maybe this push does keep that on the table still, at the expense of a little bit more downtime than in Q3, and the upgrade coming a little bit later. Also note that for China, we should get the China Passenger Car Association reports for April soon. So both sales and production, we should get those in the next couple of days. All right, next up, we've got a handful of Elon Musk updates. First, the Financial Times is putting on a conference called The Future of the Car. That kicked off today. It's going to be a 4-day event, and there are a ton of keynote speakers here, highlighted, of course, by Elon Musk. Also of note, Tesla's former CTO and now the founder of Redwood Materials, JB Straubel, is going to be speaking at this as well. And the Financial Times set this up nicely because they scheduled JB and Elon back-to-back. JB will start tomorrow at 5:15 p.m. UTC or 12:15 p.m. Eastern Time, and then Elon is scheduled for 1 hour later, but they put some overlap here where there's 15 minutes with both Elon and JB set to speak at the same time. So always good to hear from JB, and especially so if we can hear from both of them together. Definitely looking forward to that. I'm not sure if it's a paid thing only or how to access. We'll keep an eye out for that tomorrow, and if I find that out, I'll try to tweet that as well. We've also got a couple of reports here from Reuters on Elon Musk meetings. First, the EU Chief of Industry, Thierry Breton, apparently meeting with Elon today in Texas to discuss global supply chain issues, and also some newly adopted online content policies in the European Union, which would of course be relevant to Elon pending the acquisition of Twitter. We'll talk a little bit more about Twitter in a second, but the other meeting that Reuters is reporting on is an upcoming meeting between Elon and the President of Indonesia. Remember last week we had talked about Elon meeting with other Indonesian officials at Giga Texas. And this report also mentions that a team from Tesla is currently in Indonesia, checking out some of the nickel production areas in the country. So a lot of recent action there, and hopefully that'll lead to Tesla securing even more nickel supply. All right, back to Twitter for a second. We won't spend a ton of time on this. I know there are varying levels of interest in it, but there is a lot of discussion today about whether or not Elon Musk might back out of this possible acquisition. Elon can do that with a penalty of $1 billion, remember? With the way that the market has dropped, perhaps Elon would be reevaluating the attractiveness of that offer price. So maybe he could renegotiate or even walk away. Hindenburg Research, which publishes short-oriented research, today posted some of their thoughts on the situation, and Elon replied to it saying, interesting, don't forget to look on the bright side of life sometimes. And Elon in that thread also replied to a tweet saying, you could create a better platform for less than $1 billion. That being said, I kind of understand why you're buying Twitter, though I don't like that you're buying it with Tesla, an asset you said years ago that you'd only sell to fund Mars. So Elon replied to that saying, you might be right. Maybe that's a negotiating tactic from Elon. Maybe he's really reflecting on those points of view. Kind of tough to say, but definitely increases the uncertainty behind this transaction. Now, that might sound exciting for Tesla investors because, maybe Elon would then reinvest that capital into Tesla. Maybe that would eliminate the possible distraction that Twitter would hold on his time. However, this seems to be a very important issue for Elon, so if not Twitter, and he does his own thing, that's probably going to be just as big, if not bigger, of a commitment of his time, so I wouldn't really be rooting for it for that reason. As for the capital, well, a few $1 billion reinvested might be a nice little boost, but really not all that material to Tesla's market cap. So we'll see what happens there. And then the other thing on Twitter, if you didn't happen to see it, the New York Times had an article out a couple of days ago, and someone had shared with them basically Elon's pitch book for this investment. So that walks through at a relatively high level Elon's vision for what Twitter can become. He expects that he'd be able to quintuple revenue by 2028, reduce reliance on advertising down to 45% of revenue from 90% today, which would still actually be an increase in advertising revenue, but less of the total. There would also be a payments business, which would grow to $1.3 billion by 2028. So that's kind of interesting. And there would also be a new subscription product called X at this point in time. Perhaps just a placeholder, maybe not. And apparently that would grow to 104 million subscribers in 2028. As for the overall user base, Musk says that that would grow from 217 million at the end of last year to 931 million in 2028. There's also a plan for headcount, which initially would see a decline, but rather quickly return to growth. So kind of cool to see some of the details of that plan. Shifting back to Tesla, we've got a quick update from Andrej Karpathy, Tesla's director of AI. Of course, he has been on a sabbatical. He shared on Twitter today that he is back in the Bay Area, but also still on a sabbatical about halfway through, so likely done with that sometime in July. All right, last couple of things here. First, we've got a report from Handelsblatt out of Germany that the transportation minister apparently, quote, plans to extend and significantly increase the planned purchase premium for purely battery electric vehicles or fuel cell cars until 2027, end quote. They are apparently considering raising the EV credit for vehicles that cost less than 40,000 euros from 6,000 euros up to 10,800. And then for vehicles up to 60,000 euros, so more relevant for Tesla, an incentive of up to 8,400 euros. So that would be a pretty significant bump. That would be obviously pretty impactful for Tesla, but probably more so on the margin end. And then certainly for other electric vehicle makers in that under $40,000 category, that would be a big boost for them as well. So that's a big deal. We'll keep an eye out for any more reporting on that. And then lastly today, just a couple of updates on Rivian. Their lockout period ended today from the IPO, so lots of shares that can now be sold. And the stock today closed down 20%. CNBC had reported over the weekend that Ford was planning to sell 8 million of their 102 million shares of Rivian. So even with that sale, still a very significant stake for Ford. Rivian's earnings, by the way, are also scheduled for this week on Wednesday. So I'm curious to see their production and delivery numbers, as well as their control of operating expenses, which of course were very high last quarter. All right, that's where we'll leave it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, May 10th episode of Tesla Daily. Thank you.